In today's session, we are seeing that the USDJPY is finding support closer to the 109 level after a dip below 109 in last session. We are seeing that again it has found the buying momentum and it has been successful to cross and hold above 109 as the US session has got underway. And now I think this might be the time where we can start looking for the swing trading opportunities on the long side in USD and two major factors are behind this recent upsurge in the dollar. One is, of course, the rising US Treasury yield, and that is being backed by the better than expected performance of the US economy. And if we compare it to the other parts of the world, in particularly the Europe and Japan, they are not growing much, and rather than growth, we are seeing that the euro area has now entered into a double depreciation. As for the last quarter, that is the first quarter of this year, the euro area suffered the decline in GDP, and if we consider and compare it to the US economy, where we are seeing substantial growth momentum, you can see that why the US dollar has gaining strength against its most of the currency peers. So we will be looking at the trading opportunities both from the technical as well as fundamental point of view. If you consider the data docket for the day, whole day was full of data releases and there were major releases coming in for the major economies of the world, starting from the Japan. We got the unemployment data there, unemployment rate for the month of March, and it is better than expected, and of course a lot better than the prior month's number. It is at 2.6%, which is quite good if we compare it to the other economies' unemployment rate. After that, we also got the manufacturing data for the China, and here both these manufacturing PMIs are showing that Chinese manufacturing sector is continuing to grow, and the pace of expansion is quite good for the month of April as well. Moving on to the euro area, we got GDP numbers here for all the major economies of the euro area and euro area as a whole. And if we consider the individual countries, apart from France, most of the other major economies, including Germany, have shown the decline in GDP growth. And for the euro area, there is decline of 0.6% in terms of quarter on quarter, and the rate stands at minus 1.8 in terms of year on year. This is the first estimate, so it is bound to be revised, but I'm not really expecting any upward revision. And only consolation can be the fact that this pace of decline is actually lower compared to the prior quarter. And as most of the analysts are expecting, this quarter, that is the second quarter of this year, we are likely to see the euro area again rebounding to the growth momentum. But of course, unless and until we get the data to that effect, we can't be 100% sure, but the probability is quite good. We also got the inflation numbers. The inflation rate stands at 1.6% in terms of year on year, and is a substantial rise compared to 1.3 reading, which we were seeing in the prior month. But it is as per the expectations, as most of the economists are expecting the inflationary pressures to show up in backdrop of large fiscal as well as monetary stimulus in play in most of these economies. Moving on to the North American trading session, we had data points for the Canada also, but we will not be going into the details of that. We already have our slate full from the economic releases of the US. We got the personal income and personal spending numbers. Along with that, the employment cost release was also there, and not to forget the PCE price index data. And the major takeaway from all these readings are that US economy is continuing to outperform other economies, and that's what we are getting from these data also. Personal income has gone up at a record pace of 21.1%, and as all of us are aware, this is mainly being driven by the stimulus checks which were released. And if we consider the inflationary scenario there, it is also showing substantial rise, and the PCE price index has now gone above 2% and stands at 2.3%, which is of course higher than the Fed's mandate of maintaining it closer to 2%, but Fed has indicated that in near term it is likely to adapt a flexible approach and it is going to allow the inflation to overshoot 2% target. And in other releases, we also got the University of Michigan survey data, and here the consumer expectations have also gone up. The current conditions are also showing positive trend, and inflationary scenario. If we consider the expectations for 5 years, then there is not much increase. So people are having faith in the Fed's ability to rein in the inflation. But in near term, the of course inflation is likely to be higher. But in 5 years' time, people are not expecting the same conditions to prevail. Now, moving on to the technical side, we will see the USDJPY's technical outlook first, and then we will also consider the Euro USD. In both these instruments, the driving factor for the day has been the strength in the dollar, and I'm not really expecting any big turnaround in today's session. And today being the Friday session, we will have to be careful while looking for any trade in these late hours of today US session. But by the time we come back for the trading next week, we will have the clearer picture and also fresh opportunities. But we will see what we can expect in today's session and what is the outlook for the next week also. Let's start with the USDJPY technical outlook. This is the daily time frame chart, and as I have talked a couple of times in this week, the USD has shown the signs of revival after making a dip closer to 107.5. It has shown turnaround, and in today's session also, it is picking up from where it left yesterday, and in next couple of sessions also I'm expecting this bullish tendency to remain intact. Of course we can see we can expect continuation of the bullish trajectory, and if not for any unforeseen development, I think the dollar strength is likely to remain the theme, and next week also we can continue to look for buying opportunities, and we will see what are the levels which are going to be the driving factor moving ahead. We have this central pivot point in play, and which is not really far off from the current levels. But today is the last session of the month, and by the time we come back for trading, we will have the brand new pivot point series. And my expectations is that the USDJPY will be starting in the bullish trajectory next month, and even if we are closing the month on the lower side, we can expect the USDJPY to start on the higher side, and then it is quite probable that USDJPY might continue to run higher. So in today's session, I'm not really expecting any big move from the current levels. If you had gone in for the buy trade anywhere in the vicinity of 108.9, I think that was excellent opportunity there. And if you have capitalized, well and good. If not, then I think we will have to wait for Monday, or maybe if you are willing enough, you can take the risk in today's session also. But the entry point should be as close as possible to 109, and that will cut down on our risk, and we won't really have to risk too much. And of course, the position sizing should be lower in today's session, as we will have to keep the trade open if we can't really see much of move in today's session. The regression curve is also likely to flatten as now the price action has moved in the upper band, and I think in next week we will see much more development in favor of the bulls. If you consider the price area to watch out for in today's session as well as for next couple of sessions, I think the confluence area of 50 and 100 SMA is going to be the key price area to watch out. And unless and until we have any breakout on the lower side below this low established on the 29th of this month, we can be quite hopeful of the continuation of this bullish rally. In today's session, we saw USD correcting somewhat from the high established around 109.2 and dipping towards 108.8. But after consolidating, it has picked up the pace, and now it is continuing to run higher. And I think by the time we By the time the US session closes, we might see a retest of this prior swing high, yesterday's high. So I am expecting the trajectory to remain bullish, and as I said, the fresh entry should be closer to these 50 SMA, this consolidation phase lows, and the price area of around 108.9 to 109 is a good opportunity, and the stop loss will be will need to be kept closer to this immediate swing low, which is there around 108.5, and on the higher side, in due course of time, the price area of even 110 can be expected. 110 can be expected to be reached, and that might take a couple of days, but the underlying strength is quite good, and I am expecting the continuation of that. In Euro USD, the strength in USD is having the impact, and we are seeing that Euro USD has continued to decline in today's session, and now it has gone fairly close to 1.206, starting all the way from 1.212. So we have this 50-60 pips decline in today's session, and even after that, the outlook is still bearish, and I think moving forward also it will be better for us to continue to look for shorting opportunities, and in due course of time I am expecting the Euro USD to at least correct towards this 1.2 price area, which is also the prior swing high of the Euro USD when it was declining. And now that we have the fresh break above this price zone, we can expect this price area of 1.2 to act as a near-term support. So for next couple of sessions, we can continue to look for the sell trade with target being kept closer to this price marker. If you consider the pivot point series and the regression curve formation, both are continuing to point in the direction of the bulls. But I think now after this substantial move for most part of this month, bulls are getting tired, and we can expect some correction to happen. So you can say that this might not be big turnaround for the Euro USD, but still in near term, it is prudent for us to adapt the cautious approach and go with the flow on the short time horizon. And unless and until we see consolidation closer to 1.20, I'm not really expecting the Euro USD to start its bullish move, and which can be in a way can also be considered as an extension of its prior upward momentum. But after this long rally of almost more than 400 pips, some correction can't be ruled out, and that's why the immediate target I'm keeping closer to these immediate swing lows, the 1.2 area. So if you consider the fresh opportunities for Euro USD, I would say that this swing low, which is there around 1.210, is going to be a key price zone to watch out for. We also have this confluence of 50 and 100 SMA converging closer to this price band. So both these technical factors, along with these consolidation highs established in the earlier part of this week, are likely to provide the Euro USD resistance on the higher side. So whenever we see Euro USD retracing from the current levels and hovering closer to these price marker, we can start looking for the fresh shorting opportunities while keeping the stop loss of say 20-25 pips on the higher side. So depending on your entry, I think we will have to take the risk of around these prior swing highs, and on the lower side, as I said, I'm expecting the breakout below these consolidation lows, and in due course of time, it might take a couple of days, but the price zone of around 1.20 can be expected to be retested by the Euro USD. So that's my outlook for the Euro. And with that, the session is also coming to an end. If you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you next time. Till then. Goodbye. And of course, do